You are listening to Mining Stock Education.
That's what you need to look for right now. These sub 250 million market cap companies. That's what I'm doing with some of the money that I've rotated out of some of our big wins.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking today with David Erfle from Junior Miner Junky with a Y.com for our monthly interview. David, Happy New Year. Thank you for joining me. It's kind of crazy to think that 30 days ago when you and I were chatting on the show, there's been a 50% move in silver from $60 an ounce about to over $90 per ounce. Gold, as we chat, this moment is sitting at $4,828 per ounce. What's your commentary on this move, even within the last 30 days?
Yeah, Bill, happy New Year to you and all your subscribers as well. Yeah, this has been pretty incredible. I mean, the new year has kicked off just like the end of last year, right? I mean, elevated economic and geopolitical uncertainty is playing directly into the precious metals complex. I mean, with each passing week, there seems to be another level of uncertainty ushered into the marketplace, and that's encouraging now generalist investors even to continue seeking safe havens. I mean, after Trump was sworn in as the 47th president 12 months ago, the gold price has risen over 75%, while the silver price has tripled. I mean, considering the plethora of bullish precious metals, geopolitical and economic catalysts converging at the same time, the big question now to begin the new year is which precious metal is going to reach its next significant psychological milestone first. Will silver hit $100 an ounce, or will gold reach $5,000 an ounce?
So, and how is this impacting the juniors? Are the juniors believing this move in the precious metals?
Yeah, it's interesting that you say that. You asked that question, Bill, because despite gold's ascent of 53 all-time highs last year, right? In 2025. It has 53 separate daily all-time highs. And then we've already had like 4 or 5 of them this year. Gold ETF holdings among U.S. investors remain 6 basis points below their 2012 peak. I mean, that's a deficit that has persisted since since ETFs and gold ETFs were first launched in the mid 2000s. So, despite the fact that the gold price has soared, the underinvestment in the miners is still prevalent. I mean, back in 2011, when we had that, the last bull market peak, when gold peaked around $1,900, it was about 4% of investors were invested in the gold stocks. Now it's 0.4% still, despite the fact that the gold price has gone up 75% in the past 12 months. So, and the reason for that is the stock market was making all-time highs right along with the gold price. AI, people were still distracted by all the money they were making in AI. So they really haven't come into this sector yet. So despite the fact that GDXJ went up 169% last year, and GDX went up about 155%. The big money is still yet to be made, especially in juniors. I know you asked me about juniors, because if you take a look at the TSX Venture, I mean, it's now beginning to break out of this 12-year inverse head and shoulder base, right? I mean, generalists and most everybody left this sector in droves back in 2012, 13, 14, 15, right? Nobody wanted to have anything to do with juniors. And it took 12 years to build this accumulative base below 1,000, 1,100 on the TSX Venture. But now it's finally starting to break out at the beginning of the new year here. And once we have a monthly close above that 1,000, 1,100 area, and it looks like it's going to happen at the end of January here, that'll be a technical breakout. And then the next major resistance is that 2011 high at around 2450. That's 150% higher. So, I mean, I remember when I came into this sector way back in 2003, when I discovered it, the HUI had already gone up like 600%. So I was like, gee, did I miss it? And I started to do all this research and I'm like, no, we've still got a long way to go. So, it consolidated for a couple of years and the story, I sold my house and put all the money in juniors. And then, I tripled my money in like 3 years, 2 years. So, that's what we got ahead of us. We have this huge move yet in the juniors. I know several of them, later stage juniors have done really well. Fortunately for myself and my subscribers, we've done well in a lot of these late stage juniors, but earlier stage juniors, there's still a lot of upside. And I still believe there's still a lot of upside in the late stage juniors too. But I think there's more upside in the higher risk earlier stage juniors, which a lot of investors are now taking some money off the table. I'm doing this too, taking some money off the table in these later stage juniors that have moved up so much and rotating some of that capital into these higher risk juniors with more upside.
Can you give us any more insight on to maybe the percentage? Are you going to sell 25% of your existing portfolio then to put in these higher risk, higher potential reward, smaller explorers?
Well, my risk management tactic has been to like when I'm researching these juniors, right, I don't touch anything unless I see at least 3 times upside. So what I generally do,
which you've already seen in most of your portfolio at this point,
I've already seen in almost all the stocks in my portfolio. So what I generally do, if a company is, if I don't expect the company to be taken over at any time in the short term, if I don't see any signs that that's going to happen, if I still see, okay, there's probably going to be more dilution in this stock, I got in early, I got a triple, I'll go ahead and take 1/3 off the table. That brings back my original investment capital and gives me a free ride for the rest of the stock going forward. So then what I do with realized capital gains, I take them completely out of the portfolio, but investment capital, I'll reinvest. So that's what I did last year with 6 companies, and 5 of those companies, 3 of them are up triple digits. Are 3 baggers. A couple of them have doubled. And another one that I invested in late last year is my first drill play that I got into. And it is yet to move much because they've raised enough capital for this year. They've got a huge land package. They got all these targets. So once these drill results come in, I expect the stock to move much higher if they hit on some of these targets. So, that's what you have to do, right? When you get in early, like fortunate like myself and my subscribers did. In last year, my portfolio was up 265%. So if you subscribe to my newsletter at the beginning of last year and you piggybacked all the trades that I made, all the buys, all the sells, you would have been up 265% at the end of the year. And I telegraph those trades to my subscribers, meaning I telegraph the trades to them before I make the trades themselves. So basically now you've got a lot of these people who are coming into my newsletter now, and they see how many gains I have and they think, wow, am I late to the party? Well, no, you're really not, because like I said, the generalist investor still isn't in the sector yet. And just beginning this week, gold is breaking out against the stock market. It's also created this huge 12-year base. So there's this huge 12-year base in all these benchmarks, right? Benchmark of HUI versus gold, right? That's been creating, this huge accumulative base for the past 12 years. That's breaking out to the upside above a 12-year resistance line. Like I said before, the TSX Venture is doing the same thing. It's breaking out of a 12-year resistance line. Gold against the stock market is breaking out above a 12-year resistance line beginning of the new year. Gold stocks against the stock market are breaking out of this of a 12-year base. So this is all happening at the same time. So meaning that generalists are finally realizing, hey, I need to get in some gold stocks to take advantage of some of this leverage in the gold price, because in 2024, 2023, 2024, 2024, 2025, 2026, 2027, 2028, 2029, 2030, 2031, 2032, 2033, 2034, 2035, 2036, 2037, 2038, 2039, 2040, 2041, 2042, 2043, 2044, 2045, 2046, 2047, 2048, 2049, 2050, 2051, 2052, 2053, 2054, 2055, 2056, 2057, 2058, 2059, 2060, 2061, 2062, 2063, 2064, 2065, 2066, 2067, 2068, 2069, 2070, 2071, 2072, 2073, 2074, 2075, 2076, 2077, 2078, 2079, 2080, 2081, 2082, 2083, 2084, 2085, 2086, 2087, 2088, 2089, 2090, 2091, 2092, 2093, 2094, 2095, 2096, 2097, 2098, 2099, 2000, 2001, 2002, 2003, 2004, 2005, 2006, 2007, 2008, 2009, 2010, 2011, 2012, a lot of investors got soured on the sector because you had the gold price go up 27% in 2024, yet gold stocks only went up 13%. Like, hey, wait a minute. Gold stocks are supposed to provide leverage. So, that created basically a false move lower coming into 2025 of people fed up. Like, okay, why am I in gold stocks? They're not providing leverage. I'm out. That was the time to really load up. And my subscribers and I, that's exactly what we were doing in 23, 24. I had all this time to do all this research and make sure I got into the best of the best. And these stocks are really performing well now.
Dave, if you've already gotten back your initial capital in most of the positions or all of them in your portfolio, and you're now initiating some positions that are higher risk, if someone newly subscribes and they look at your portfolio, is it a buy to them to say, if you buy what I've outlined here, you should do well? How do you reconcile those two things, considering you're up hundreds of % and you already got your initial capital back?
Yeah. I mean, I touched on that earlier in my explanations, and I get it. People look at that and they go, wow, I missed this move, but you really haven't, because what you do is you base these assumptions of these stocks still going higher on valuations, right? Valuation to the gold price, valuation to peers. I mean, valuation to the projects that they're de-risking. What phase of de-risking are they in? If they're late stage, they've raised the money, they're about to build the mine, or if they're building the mine and it's going to be going into production pretty soon. I mean, that's a great example for my biggest gainer, which is Montage Gold, right? I mean, it's been in my top 10 for a couple of years now. And people invest in my service and they see, oh, it's up 1,000%. Should I not get into this one? Well, it's up 1,700% now. It's basically a 17 bagger for us now, because they just announced this week that they're going into production 6 months earlier at the Kone project in Cote d'Ivoire. So this has been a monster win for us. And I've trimmed it a few times on the way up, and I still have a large position, but it keeps becoming 15% of my entire portfolio. So I trim it a little bit, and then it keeps going higher and gets to 15% again. So all you need is one or two of these stocks in a basket of quality companies to really supercharge your portfolio. And unfortunately, I have several of them. And, my subscribers and I have done really, really well since the beginning of last year, after being very frustrated several years before that. I mean, the more we got frustrated, the more hope I had that, hey, this is when this thing blows up and the sector finally breaks out. I mean, based on the bear market and the frustration and the undervaluation and how long it took place, this bull market is going to be really something spectacular, and it already has. And this is just a beginning. Like I said, I mean, because if you take a look at the underinvestment, especially in juniors, I mean, there's generalists are still really haven't discovered this sector yet.
Do you feel pressure to go find, let's say, a copper pick that maybe hasn't moved yet for your subscribers? Do you feel any of that pressure, Dave? Because
I don't feel very much pressure, no, because I mean, I did that in June, July of last year, and that copper play that I recommended my subscribers has already tripled. I understand how this sector works. I understand that the miners always move first. So I got into my retirement account. I got into miners big in 2023, and they're doing fantastic. So then once the miners and the royalty plays, they start to have when they have their big move, you start to see some sector rotation into mid tiers, and then mid tiers, they have their big move. You start to see sector rotation into late stage juniors. They have their big move, and then you start to see sector rotation into earlier stage juniors, like maybe PEA stage or pre-feasibility stage juniors. They start to move, and And then you start to see sector rotation into even earlier stage junior. Maybe they've got a fantastic property. They've been coming up with really good drill results. They've either put out a maiden resource or they're about to, right? Those are even higher risk. And you look for, like, that's what you need to look for right now. These sub 250 million market cap companies. That's what I'm doing with some of the money that I've rotated out of some of our big wins. So I just introduced one last week. This company is got a fantastic property, district scale sized. It's silver. These primary silver projects are super, super rare. So these companies, what they're looking for is a project that's district scale. It's got huge upside. They've already got these results. If they're 300 grams, if they're 300 grams per ton silver equivalent and above, that's what they look for. And if there's a resource, they want to see a resource of at least 100 million ounces with upside. And they want to see the potential for it to be fully permitted within a reasonable time frame. That's a big one.
What's the role of technical analysis on that individual name? How do you use that to determine an entry or an exit?
Well, it's interesting about technical analysis. I'm glad you brought that up, because in bear markets, right? I mean, these companies, they can lounge around at undervalued to super undervalued prices, even though they've got all this metal in the ground. Investors don't care. Drill results come out, they get sold because they know the company's going to have to raise money soon, and then there's going to be a warrant. They'll just get in then and then strip the warrant. I mean, all these games are played during bear markets, right? So if you mistime your entry in a bear market, it could be dangerous in these juniors, because you'll end up sitting on dead money for a while, or possibly even selling it for tax loss by the end of the year. But in bull markets like we're in right now, right? And you get into my service or you get into somebody else's service, and they've picked these quality juniors that have gone up, they've done well, right? If you mistime your entry in a quality junior that remains undervalued to the metals, and especially undervalued to its peers, Mr. Market is going to bail you out of your mistimed entry. That doesn't happen very often in bear markets, but it happens in bull markets. So, you have to be super patient in bear markets, but you only have to be a little patient in bull markets, because, like I said, I mean, if you mistime your entry on something, Mr. Market's going to bail you out.
Dave, when you were chatting about TA and juniors, I was just recalling a conversation I had with an individual with a significant amount of money. And I said, do you buy junior mining charts? He said, no, Bill. I create them. So on the upside, or if management ticks me off
Eric
on the
Sprott, right?
No, it wasn't Eric Sprott. But if they tick me off too much, I'll create the chart on the downside. So
I mean, if you're a big newsletter, you can do that.
Yeah.
You could become the market. I mean, that's why I have a cap on my service of 500 subscribers, right? I don't want to get into a company that say it's, less than 200 million market cap, 150 million market cap, whatever, and there's not a lot of liquidity. And all of a sudden, my subscribers and I become the market in the stock for a while. I don't want that to happen. So I limit.
You personally buy after one full day of trading, after you alert your subs? Is that
I alert my subs, like I usually do it on a Sunday night. Right. I write the report usually over a weekend or something. Yeah. I don't really get a lot of time off. And I'll introduce it, and then we all kind of try to get in at the same time. I'll wait till later to get in. But since I only have right now, I have about 450 subscribers. So the companies I get in are very liquid, especially I make sure that they're liquid in the US. Right? Because I think like 65 of my subscribers are US based.
65%, you mean?
65% of my subscribers are US based. So we're getting into the OTC ticker, right? And generally the OTC ticker has less liquidity than the Canadian listing. But I make sure that the companies that I get into have enough liquidity to where we all can get in pretty much around the same price, and we don't cause that much of a spike in the stock.
All right, so we've laid out the bullish case. What should be some red flags that people just getting into the sector should be aware of? I know there's a laundry list we go through with each company, but Dave, maybe just some big top 2, top 3 things that they should consider as they may be initiating a new junior mining portfolio.
Okay. You really have to do your due diligence on management, because as this bull market gets more credibility by generalist investors, you're going to see more snake oil salesmen get into the sector. So there's going to be more lifestyle companies probably, and so you want to do your due diligence on management, right? I mean, have they done this before? Have they built a junior before? What's their management team like? Have they been successful? Have they been serially successful? Have they done this before? Are they participating in the financings? Or do they have just a bunch of cheap paper, right? So, or are they just getting options? They're not buying shares in the open market. They just got a bunch of options to be the CEO. That's a big one right there. Another one is I eliminate a lot of companies if they're not big enough, right? If they're not big district scale that have, huge upside potential, I'm not going to touch it. If they don't have a management team that, I've done the research on and they don't seem copacetic to me, or maybe they're just a securities lawyer or something, or just a geologist, maybe. If I like the project, if I've done that before, where I've liked the project, but the management team was kind of suspect. I mean, they didn't look like scam artists, but they didn't look like they were really capable of building a junior company. So I'll wait till the project gets so much better and the board realizes that, hey, we need to get a better management team in here. We need to get somebody that knows what they're doing, knows how to build a company, right? Then I've done that before where, okay, it's time to get into the stock. Now they've changed the management team and the project is still good. And it's right. It's been proved successful where the company's done a great job in producing really good drill results. I like their maiden resource, or they make their maiden PE or whatever. And wow, look, they've got a new management team now. That's something to really look for. That happens. That does happen a lot.
All right. Well, we'll conclude there. David website, again, is Junior Miner Junky with a Y, not an IE, with a Y.com. David, as always, appreciate chatting with you every 30 days on the show. So we'll touch base in 30 days. But before you go, for some viewers on YouTube that are saying, what jersey is that guy wearing? What NFL jersey do you have on there and why?
Patriots, Drake May.
But you live in L.A. You live in L.A. Okay, you got to tell the story. You live in L.A. Why are you a Patriots fan?
Well, I live in L.A. and I'm a Patriots fan because when I was 13, right, I became a big, huge Red Sox fan because I hated the Yankees for one. Red Sox fans hated the Yankees, and they had two really good rookie players in Fred Lynn and Jim Rice. So I became a big Red Sox fan. And at the time I was a Rams fan, right? I liked the Rams, but I remember going to their last game when I was a kid here in LA. They moved to St. Louis and they were playing the Washington Redskins, and they drove down the field. And if they'd have made the field goal, they'd have won their last game here in Los Angeles. Well, ironically, he shanked the 23-yard field goal. And I was like, Rams are leaving LA. I'm leaving the Rams. I'm already a Red Sox fan, so I'm going to be a Patriots fan too. Unfortunately, the Patriots were pretty bad also at the time, but they got this guy named Tom Brady about 10 or 15 years later. So I was redeemed in picking the right team, and it looks like we got another great quarterback coach combination again. So it's good to be a Pats fan again.
That's right, and they're in the semifinals for those that don't follow football.
Absolutely,
Pats are.
Yep.
All right. Well, thanks for coming on again, Dave.
Absolutely, and a happy New Year to you all, and good. I expect good things for 2026, and best of luck. Be safe, good trading, and bye-bye.